Well, Happy New Year to all of our viewers. Welcome back to a performance update for the HFRX with President of HFR Index, Ken Hines. Welcome back, Ken.
Thank you and Happy New Year to everyone.
So, Ken, please give us an overview of what the month of December as a whole looked like for the HFRX.
Yeah, it was a good month for the HFRX. I think we saw two important things. We saw defensive outperformance of an equity market pullback, and at the same time, we saw the benefits of strategy diversification because you saw performance generation from the areas that weren't the leading areas of performance for the year, and some of the areas that had been underperforming at different points in the year actually delivered performance in December. So it's always interesting when we see that. Gives us a lot to talk about. Looking at the broader markets, of course, after the really strong November we had on the election results, we saw a significant pullback in a lot of large cap equities as people were, I guess, pricing in uncertainty about the incoming administration, uncertainty about whether, how, I guess the biggest driver was people sort of pricing out some of the optimism about interest rate cuts into 2025. And as you look ahead and they price those things in, people were pulling back from some of the higher growth equities where they'd really priced in a lot more interest rate cuts than are likely to materialize given the inflation picture we see right now. So we saw a stronger dollar as well, and we saw good hedge fund performance in December.
Great. So let's look at the composite HFRX performance for December of 2024.
Like I said earlier, we saw defensive outperformance. We saw the benefits of strategy diversification. The leading area in December was event-driven. The second leading area was macro. As you know from other videos that we've done, event-driven started 2024 out kind of on the slower side when some of the other directional strategies and the macro strategies, uncorrelated strategies, were doing well in the first half of the year, was sort of underperforming. So it ended in a stronger place where we actually saw it delivering strong performance into year end. So about a 0.5% gain, which doesn't sound like a lot, but compared to a 5.25% decline for equity markets, for all the reasons I pointed out earlier, still pretty impressive. And obviously, event driven is a risk on directional strategy for sure. So you did see, and I think that as we interpret that, there's significant amount of optimism about the M&A environment and the deregulation associated with the incoming administration. So that's really where we're seeing a strong bid in event-driven strategies for sure. Macro CTA, again, been up and down over the course of the year. Started off very strong, had some disappointing months throughout the year, but ended the year with a 30 basis point gain, which again, doesn't sound like a ton, but against a declining month, it's very impressive. Overall composite, just a de minimis gain. We have it at 1 basis point exactly. So not much of a change there, kind of unchanged, but narrowly positive month. And then even the two strategies that declined for the month, relative value, fixed income-based relative value, and equity hedge, you're talking about 0.25% and 0.33% declines. So significant outperformance of equity markets to end the year in December.
Okay, so let's drill down to the sub-strategy level for December. What stood out?
Yeah, you can see here really a consistent story to the earlier slide. It was the quantitative trend following macro CTA strategies that were the leading area of performance. And these have been on both sides of the ledger as the year has gone on. And as is usually the case, a gain of over 1.5% for the month. So a strong year end with some of those gains being really across all of the areas: short equities, short fixed income, long certain commodities, long currency, long the US dollar in currency sense. Those all drove gains when you look at December. In the event-driven side, you can see special situations, merger arbitrage, 50 basis points, and then just narrowly positive for merger arb. But again, that's against the backdrop of a decline of 5.25%. And then the two other areas that, from a sub-strategy standpoint, just small negative. You have equity market neutral and RV multi-strategy, just essentially unchanged for the month.
Okay, so taking a long step back, looking at the year 2024 as a whole, What's your take on the composite index performance?
Yeah, you can see here to my point earlier, event-driven ended the year very strong, but it really was, it came out in the early part of the year was underperforming, both event-driven and macro. You can see up 3.75%, 3.8% for the year. So not a really strong full year performance, but a strong year-end performance is what we're seeing there. Again, obviously we had the pullback in equities, still a 12.9% gain for the year. A lot of that was in the month of November, as we know, really strong risk on sentiment, which reversed a little bit in December as people started to think ahead as to what they're really expecting to see from the new administration, policies of the new administration. Leading area of performance, equity hedge, it's really been the leading area of performance for most of the year, 7.8% gain there, and then 5.25% for the overall composite. So a decent year, and again, ending the year strong with a gain essentially negatively correlated with declining equity markets into the end of the year.
And then as you look at the performance for 2024, the sub-strategy level, what do you see for the year ahead?
Yeah, even though you saw some of those growth names pull back in December, it still wasn't enough to keep it from being the leading area of performance for the year. So you see 9.3% gain for HFRX fundamental growth. Equity market neutral, we've talked about this throughout the year. When does equity market neutral do well? It does well when you see mean reversion. You see historical prices of equities converge to their historical norms after a period of dislocation where they can get widely dispersed and pushed away from their historical norms as that comes back into line. And again, these are typically dollar neutral, beta neutral, neutral in any way that they can neutralize them. And so you really just isolate the factor-based performance there, and typically in a quantitative sense. So 7.2% gain there. So we saw some of that mean reversion happening into the end of the year. Fundamental value in a very similar way. Obviously not, the third leading area after fundamental growth, market neutral. And then we've got convertible arbitrage, which, as you know, is a long bond, long volatility, short equity strategy at 6.8%. And then 4.75% for the fixed income based credit multi-strategy, RV multi-strategy index. So a strong gain for that index for the year. Those are the 5 leading sub-strategy areas for the full year.
Okay, wonderful. So that wraps it up with the HFRX December 2024. Any final words you'd like to say?
We'd like to remind people to visit the new website. We just got this up a couple months ago, so feel free to visit www.hfr.com. If you're watching this video, you know we do regular performance updates on our YouTube channel. Please subscribe to the channel. Forward us any questions you'd like to see discussed in future performance updates. We're always happy to have the questions and try to answer things that would be helpful and interesting. When you go to the website, download a copy of the Investor Guidebook. It talks a lot about the utility of investable indices and the way institutional investors are using those. You can download a copy of that there. And then finally, if you'd like to set up a call to discuss anything on this call, anything you see on the website, anything you see in the Investor Guidebook, you can email me, Ken Hines at HFR. You can email anyone that you're currently working with or in touch with at HFR. Or if you're not sure, just send an email to indices@hfr.com. That always gets routed over to me, and happy to set up a call to discuss any questions that you have. Thanks. Happy New Year, and we look forward to speaking with you soon.